Tom Lee just made some pretty bold predictions about this market. Check this out.
Here's what concerned me about a couple of weeks ago, Tom, with the market's behavior, and that was watching all of the AI high flyers dip and drop, and pretty precipitously in some cases, because it looked like the Fed wasn't going to cut. That raised questions about what was happening in the private markets, and it made me start to wonder, okay, are we looking at a lot of business models that don't work if the Fed doesn't continue to cut rates? Are these the business models that are driving and powering the market right now? That's the one thing that made me sit up and say, that's a little different.
Yeah, I think there was a bit of soul searching, Becky, in November, because we know leverage rose, and we know there was deleveraging in some markets like crypto, and we know margin debt's high. And I think that there was essentially a reset in November because the market had a 6% decline, but the AI stocks and the meme names and a lot of other names fell even more. So I think that position reset has been healthy. And I think many fund managers we talked to in November, in the midst of all that, kind of threw in the towel, thought the rest of the year was sort of a write-off. And now if December is strong, there's going to be a bit of performance chasing. And I think that's what you should typically expect in the final weeks of the year.
I thought it was when we saw Bitcoin sell off and sort of the high flyers sell off on the notion that Powell got hawkish at that one, whatever it was, that one meeting. And then Williams totally turned that around. And the Fed futures jumped, and it became clear they're definitely cutting again. And we got very little for that. Bitcoin should be back at 100 if it really is totally dependent on Fed easing. And if it's a debasement trade, which people say it is, we didn't get much. For now, everybody, you're sure that they're going to cut now. There was a time where we thought they weren't going to cut. What do we get for going back to cutting mode?
Bitcoin and crypto have been disappointing because they really took it in the gut in mid-October and then kind of got hit again when, you're right, when the odds of a Fed cut dropped, Bitcoin fell. And then now that the odds have recovered of a cut, they haven't quite recovered. I think that's still the lingering effects of that deleveraging that happened on October 10th. It's not that different than the wipeout that happened in 2022 with FTX. That took 8 weeks. So we're kind of emerging from that. That's 7 weeks in the rearview mirror. So maybe in another week or two, I think crypto has fully washed out, and that's when it starts to participate.
Yeah, wipeout's a bad word. If you could pick another one next time, Tom,
yeah.
You had very aggressive targets for the S&P and Bitcoin by the end of the year. It'd be crazy to hit the Bitcoin target, for example. I don't know what that was. But 7,000 on the S&P is still something you think that can happen this year?
7,000 is only 2% for S&P. From here, I think 5% or maybe even 10% is possible in December. So I think 7,200, 7,300 is likely for S&P.
Ask you not to do that. You're giving me a target and a time. Don't. It's not good for your career. Don't do that. You're going to be wrong one of these times, but you don't care, do you? You've been right enough.
Well, I'm just looking at probabilities, but you're right. We've been wrong plenty of times, Joe, so I'm okay being wrong too.
Okay. I never have been, really. I don't think so. That would be a big shocker. It does. It happens to all of us. How about Bitcoin? Would you think you'd be happy with 100 if it got back by the end of December, wouldn't you?
Yeah. In fact, I think it was looking good, like you said, over the weekend, and then we got a decline, sorry. Maybe because the Bank of Japan looks hawkish.
Yeah.
But I don't think the 4-year cycle, I don't think the Bitcoin high is in place. But you're right. We were too optimistic about this happening by December. But I do think Bitcoin can make an all-time high by the end of January. So I don't think we should think the highs are in place for Bitcoin or Ethereum or crypto. So a lot of it's going to depend on equities recovering, which we expect it to. And that helps the animal spirits. And I think a new Fed chair will help. And we have, as Becky said, when people got worried about a hawkish Fed, that kind of hurts the discount models the discounted cash flow models like AI models, but it hurts crypto models too. So if we have a dovish Fed, that's really a tailwind.
Tom Lee's prediction for the S&P to hit 7,000 this year sounds aggressive, but Wall Street has been constantly underestimating how high this market can climb. Multiple major banks now have targets ranging from 6,600 to 7,100 for year end, with Goldman Sachs raising its target to 6,800 after the Fed begins cutting rates. What's interesting about Tom Lee is that everyone tells him not to make these calls, yet he keeps doing it and being right. The market has climbed over 30% this year, while pessimists keep waiting for a big crash, which, although there's been a bit of a correction recently, hasn't happened. Wall Street analysts spend most of their time being cautious. They give conservative targets so they don't look foolish if things go wrong. But this approach means they're always chasing the market higher instead of getting ahead. The earnings picture is actually stronger than people realize. Companies keep building expectations and raising guidance. That's not what happens when a bubble is about to pop. That's what happens when real business value is being created. Sure, some valuations look high compared to historic data. The market is trading around 22 times future earnings when the average is closer to the high teens. But that ignores one huge factor. AI infrastructure spending is driving real productivity gains that justify higher prices. Companies aren't just burning cash. What they see are actual returns from their technology investments. Tom's 7,000 target might sound bold, but it's only asking for a few more percentage points of gain. The biggest story is how the market keeps proving the doubters wrong month in and month out. But Mr. Lee also spoke about something way more volatile than stocks. Tom Lee believes that crypto just needs time to wash out after the October deleveraging event, and that dovish Fed policy will be the tailwind that pushes Bitcoin to new highs. The October deleveraging wiped out nearly 20 billion in leverage positions, but analysts widely view this as a crucial market reset that purged speculative excess. The reduction of excessive leverage is seen as a positive step for long-term growth, even with short-term liquidity challenges. In my opinion, Tom Lee's timeline makes total sense when you look at how crypto actually recovers from these events. Tom mentioned it takes about 7 to 8 weeks to fully wash out from a deleveraging like this. That lines up with historical patterns. The October crash, in my opinion, wasn't a sign that crypto is broken. It was the market clearing out all the people who were gambling with borrowed money. This deleveraging was necessary and ultimately productive, demonstrating that underlying blockchain protocols function flawlessly under extreme market stress. The technology is solid. The problem was too many traders using crazy leverage. So this is why Tom Lee is bullish on the Fed helping crypto. When the Fed cuts rates, it increases liquidity in the financial system. More money flowing around means investors start looking for places to put that cash. Lower interest rates increases liquidity in financial markets, providing more capital for riskier investments like cryptocurrencies. Crypto becomes more attractive when borrowing bonds are paying less. The key is that crypto needs both things to happen. First, the deleveraging had to clear out the weak hands and excessive risk. That's done. Second, the Fed needs to keep providing liquidity through rate cuts. That's starting to happen. When you combine a healthier market structure with easier monetary policy, you are set up for the potential of new highs. Tom isn't saying this happens overnight, but he is saying that crypto could make new highs by late January. That gives the market time to finish recovering from October and time for Fed policy to really kick in. The people who think crypto is dead are missing the bigger picture, in my opinion. Every major deleveraging event in crypto history has eventually led to new all-time highs once the dust settles. If you've been wanting to learn about AI but don't know where to start, I built a course that breaks down everything into simple, structured lessons. We cover all the fundamentals, plus deeper topics like compute and physical AI, and you get lifetime access even as we keep adding new modules. The price will only increase over time as the course expands. Ads are expensive and people don't trust them anymore, but they do trust YouTube. That's why 3 of our clients now make $100,000 a month for their business from growing a YouTube channel. If you run a business, book a call with me and I'll help you map this out.